What are the ASC 606 compliance rules for project accounting? Imagine managing a big project where every dollar, milestone, and deliverable needs to be tracked perfectly. That's where understanding the rules for revenue recognition becomes essential. Today, we're exploring how the accounting standard called ASC 606 guides project accounting. This standard is all about making sure companies record revenue accurately from long-term contracts with customers. ASC 606 uses a 5-step process to help companies recognize revenue properly. First, you need to identify the contract with your customer. This means confirming there is a valid agreement that creates enforceable rights and obligations. Second, you identify the performance obligations, which are the specific promises to deliver goods or services. In project work, these could be different phases, milestones, or specific deliverables. Third, determine the transaction price. This is the amount you expect to receive in exchange for fulfilling the contract. It includes considerations like variable payments, discounts, or penalties. Fourth, allocate that transaction price to each performance obligation based on their standalone selling prices. This ensures each part of the project is recognized correctly in your books. Finally, revenue is recognized when or as the performance obligations are satisfied. This could happen over time if the customer benefits as the work progresses or at a specific point when control transfers. For example, if a software company delivers a project in phases, revenue might be recognized at each milestone. In project accounting, companies often recognize revenue over time because the value is delivered gradually. They need to assess if the customer is simultaneously receiving and using the benefits, or if control shifts at specific moments. To stay compliant, companies must keep detailed documentation of contracts and performance obligations. They also need to regularly review and update estimates for variable considerations like scope changes or change orders. Disclosures are another key part of ASC 606. Companies must be transparent about their revenue recognition policies, judgments made, and the timing of revenue and cash flows. Advanced SaaS finance and specialized finance software help automate these processes. These tools can handle complex contract terms, allocate transaction prices accurately, and generate revenue schedules aligned with the standard. For SaaS and project-based solutions, compliance can be tricky because of multiple deliverables, subscriptions, or usage-based billing. Using software that incorporates ASC 606 rules makes it easier for finance teams to manage contracts, track obligations, and recognize revenue consistently. To sum up, following ASC 606 in project accounting means applying this 5-step model carefully, managing judgments about obligations and prices, and keeping clear records. Using the right finance software can make this process smoother and help companies stay on top of compliance.